one interesting trend, of course, is the move into plain vanilla ETFs, equity ETFs like the SPY. But at the same time, I notice, John, your equal weight ETF, the RSP, which is very popular out there, has attracted a lot of inflows. In fact, the assets under management, the shares outstanding are 30% higher in the last 5 months. That's quite a move for such a big fund. Of course, the RSP equally weights the S&P 500 as opposed to the market capitalization weighted S&P funds, which are far and away the more prevalent one. John, why is equal weight suddenly more attractive to some class of investors? Obviously has been very interested in putting money to work in that space in the last 4 or 5 months.
It has. And Bob, look, I'd use an analogy here. When you go to the doctor and they're checking you, they look at your vital signs, your temperature, your pulse, your blood pressure. They listen to your breathing. They get a quick gauge on your health. Starting about 8 months ago, we started to hear from clients that they were concerned with some of the vital signs on these large market cap weighted indices. And it was around two things: concentration and valuation. The big tech names have, gotten even bigger. They're dominating the indices. In some cases, they were up over 25%. The top 10 names were making up 25% of the cap-weighted exposure. And so you've got to go back to 1975 to find that level of concentration. And even then, it was more diverse. It wasn't highly concentrated in technology. So, Bob, we had a lot of clients come to us looking to get a more balanced approach. They wanted to stay in U.S. equities, but they wanted a more balanced approach. Top 10 names in this, 2.5%, not 25%. So a more balanced approach to the market, and that's what was driving a lot of those flows over the last period. Bob, I'd mention, though, it's not just a recent phenomenon. This fund goes back to 2003. Had you invested $1 in the equal weight S&P 500 in 2003, you'd have $6.7 today versus 5.4 in cap weighted. So it's a trend that is relevant now, but it's been important for a while.
Yeah, it's a close call. From a classic investor perspective, I'm a Jack Bogle disciple, Burton Malkiel guy, so you want to have broad diversification, of course. The question is, does equal weight give you truly broad diversification? A traditional guy might say, well, market cap exists for a reason, because bigger companies have a more important weight, and therefore they should have a bigger weight. It's a tough argument, but I get the whole equal weight idea.
It does, and my background, of course, having lived and breathed the market cap weighted world for most of my history. But there's also a conversation to be had, right, of, well, if I'm overweight, maybe as my core portfolio in market cap weight, and I start to believe in mid cap or small cap, do I have to go pure mid cap, pure small cap, or can I take something like an RSP or an equal weight and actually add it to the portfolio and give me exposure to new places? So even someone who's a purist on the market cap weighting can still look at something like an equal weight and say, hey, is this an interesting way to start to add other parts of the investment experience or the other parts of the mid and small cap market at a different weight than maybe going pure? So it is an interesting blend, and it all comes down to, look, ETFs give us this option. ETFs give us a nice, easy way to do this versus going out and buying hundreds of stocks and having to cross bid-ask spreads, et cetera.
The old school guys would say, look, you certainly have 5 stocks or 20% of the S&P. Okay, you're right. Yes, there's all these other things like energy and banks that have underperformed for a long time, and you haven't done anything with that. But now we see value outperforming. We see energy doing better. We see banks doing better. And so those guys, if you're a market cap weighted guy, you're now getting the benefit of those that move up in value and energy, and tech is moving down. So the market's rotating, but you own the S&P 500, so you're in good shape. That's the old argument of the market cap weighted guys, and I get it. But this is a fascinating discussion about equal weight.